Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is April 29th, 2020. If you want to look at a recap of April so far, off of a historic lows month of March that we put in, and a historic bounce. We haven't seen a bounce like this in all the broader markets since going back to 1974. So, a couple of things to think about very specifically for our clients and friends and family out there. Thank you for all your support and thank you for tuning in, because I think we've learned a lot over the last 35, 45 days together. And if you've been watching me, I've been very, meticulous about going through our morning research and sort of relaying what we believe is very important as it relates to your portfolios and your money. What the markets are actually watching. And again, as I indicated before, with HighTower, we have access to over 50 research resources that we go through on a daily basis, the investment policy and investment committee here as a team in Blanke Schein Wealth Management. And there's very specific things that we put into practice, put into portfolios as it relates to, as it's important, because we all know that some headlines are out there to sell newspapers, and some headlines are there to truly inform us. Ultimately, markets really care about the things that we're hopefully looking at and bringing to your attention. So with that said, let's get right into it. There's 4 topics. It's a very healthy agenda today I want to discuss that the markets are looking at, that we're looking at for our investment policy. Markets are making a very positive, constructive last month here, if you will, from what we said is a trading range. So we believe the S&P 500, as you're going to see, is in a trading range. And it's going to be in that range until ultimately it breaks out on the top side. And the top side is at 2950, just about, for the S&P 500. And we're at that today. As we speak right now, the market has a significant rally of about 2.3%. So that being said, we're going to watch it. The range that I said specifically in very previous broadcasts to you guys was that the S&P 500 is at a 2950 on the top side, could stretch it to about 3,000 for the S&P 500 to about 2,500, 2,400. So again, we've bounced from the lows. Now we're pushing off the highs, and so there's going to be significant resistance on the top side. Now, what's going to break us through that, or what are the things that we're looking at? Well, some positive signs that the market is actually making a broadening its rally, as I discussed very much in times past. The market is very much a mega cap rally, which means it's the largest companies of the S&P 500 are really doing the bulk of, off of the bottom, trading higher. Well, now we're seeing, the smaller companies, even as a cap versus market weighted, the equal weighted S&P 500, as we watch that, is doing very well versus cap weighted. Cap weighted just means if you take the distribution of S&P 500 based upon their size of their company and relative to their percentage market capitalization weighting to the S&P 500, that's the distribution of return that you get. So basically, the large caps that rally, are really going to pull the weight of the indices versus an equal distribution, meaning if you're all 500 companies get equal weighting as it relates to, percentage return. So we're seeing now that we're having equal weighting on the S&P 500 now is catching up. So that's an indication to us, basically, in the investment world, that it's a broader rally. And we're also seeing that play out in mid caps, but very specifically small caps as well. That's a healthy sign right now. So our next topic is don't fight the Fed. With the trillions of dollars that we're seeing of liquidity that it's also being injected into all various aspects of the market itself, ultimately what that is a signal that the Federal Reserve is here, lender of last resort, but more importantly, it's going to be at the bazooka level of support to the marketplace. What I firmly believe, and I've been I study the Federal Reserve from the Great Depression and the policy errors that they made or the things that they did well, as well as study them through the Great Recession as I manage our clients' assets through that. Most recently, again, the Federal Reserve made some missteps early on in that process as well. The Federal Reserve of today is a different version. They've learned from years past. In fact, that's one of the things for policymakers to do in monetary policy is their job is to be students of monetary policy history. so that they can then, when they see something going forward, like a crisis that we have today, no one could predict it. But one thing is that the swiftness and the magnitude of the reaction to provide ultimately the market confidence, whether you need it or not, they actually stood up and were right there. They've done an exceptional job. They're flooding this economy, or excuse me, the markets with so much liquidity that I don't believe we're going to need the number of liquidity that we're actually seeing, the headlines. And that's part of what they're doing. I think one of the things we're going to look back in history from this, as we're writing history, is what they have done, the psychology of this. It's meaning that they've gone to the marketplace, they've clearly signaled and indicated that they are going to be there at all costs, and they have a balance sheet that can be there at all costs to do whatever it takes. Now think about that. We've got a U.S. economy that going into this, prior to this, was the best in arguably history, or most recent history for sure. Unemployment all-time low, GDP taking off. You look at home sales, that was actually, in home prices, that actually started taking off as well. There's a lot of indicators that January and February going into this COVID-19, the U.S. economy was actually starting to heat up. So they came into a situation where we have a strong economy, mandated a government shutdown, but more importantly, it was the fear that took over everything else. And so what they've done is stepped up and said, wait a minute, we want to change the psychology of the marketplace. And I firmly believe that's what they've done. So we're going to see this in history books. Time will tell. We'll look back in this video itself. There's further conversations, and there's going to be volumes of debate on this as it relates to the magnitude of what they've done, and if it was warranted or not, or if their PPP program, was it executed properly or not. I think we're working through that and living through that right now. There's things that could have certainly been done better from an execution standpoint, but the intent, again, the standard of like mom and dad savings and loan, MNDSNL, as we refer to in the Schein household for the 4 kids that are always coming to mom and dad. And when I know one of my teenage daughters walks into the room and spends time with me and just from across the room just smiles at me and asks me about my day, the first thing I ask is, what do you want? And how much? The next question is, how much is it going to cost me? So ultimately in our household, you have mom and dad savings and loan, but I think that's the psychology of the comfort that the market is really seeing. It's supporting the S&P 500 right now, the broader markets in general. And I think that psychology is critical as we get through this. So we're going to see this play out, but I think it's a very important point here. Don't fight the Fed. And the last couple of points I wanted to point out is, don't fight the Fed, because we're trillions of dollars there. And we're making progress on all the medical fronts. I'll let the news of the day on your news that you tune into at the end of the day, I'll have them tell you about Dr. Fauci and everyone else and all the great medical community and what they've done as it relates to the progress. And again, it's a world that's working at this. U.S. is doing really well, and we have wonderful companies that are working at, therapeutics and vaccines, but the world is actually working together on this. I think that's another reason to be optimistic and positive on this. And then finally, the coffee indicator. We avoid saying specific names on these videos for compliance, so that clients don't think, or investors don't think that we're recommending a company to go out and it's a solicitation, which is not. So I'm going to refrain from using the company's name, but there's a company that sells coffee on every corner. Okay, and the CEO was on CNBC this morning, and he basically talked about that his plan is by early June to have 90% in the United States, 90% of his coffee stores opened up in the United States. So starting next week, he's going to roll that process out in limited areas across the United States. Again, that's another reason why the market's up. It's a positive sign that the market sees, as well as America is reopening. Again, there's governments that are in charge of their respective states, if you will. But what the market knows is that there's also corporate America. So corporate America has, there's not just one coffee shop out there. There's the mom and pop coffee shop, which I recommend you go shop or go get your coffee there when they do open up, but in support. But more importantly, there's a coffee shop across the street from another one. And that's called the competition of America. So that spirit, that animal spirit of you, God forbid you don't want, to be the last person to open up, because what's going to happen is that you're going to have the coffee shop across the street steal customers, and that's the pure genius of the capitalistic market system. So that animal spirit is now going to come out, hopefully very prudently and cautiously, keep our workers safe, keep our customers safe. But at the end of the day, you've got the United States literally looking at, there's going to be a better day tomorrow, and 6 months from now, and 12 months from now, and 2 years from now, hopefully we're not even thinking about this. So I think that's what we're seeing right now play out, one, in the markets, and two, in corporate America. Again, thanks for listening, and keep tuning in. We're going to continue to give you a daily update, and I appreciate your time and attention. Take care.